As always, I'm going to take a look at the market happenings we have in the week ahead to try to prepare you for what's coming. And then I'm going to share with you a handful of trading setups in stocks with top Zacks ranks. So let's get into it. Just a real quick overview of last week. The big news was the Fed minutes. And in it, you had a lot of the Fed members talking about how they don't want to raise rates too quickly. And there is like this slight risk of reaccelerating inflation, which would be really bad. So we'll take a look at it a little bit later too, but we will see that expectations for interest rate cuts from the Fed have continued to fall. And as of now, we're at expectations of 3 cuts within this year. And about a month ago, it was 6. So there's been a real change in those expectations. We'll get into that in a minute. But let's look at this week's economic calendar. It's fairly busy. Monday, we get new home sales. Then on Tuesday, we have durable goods orders, consumer confidence. So, look at the industrial sector and consumer good. Then on Wednesday, we get GDP, first revision. And, we're expecting 3.3% annual growth. We also have a handful of Fed speakers in the second half of the week. President Bostic kicks it off Wednesday. Then Thursday's a big day. As usual, we get the initial jobs claims, which we have yet to see a spike in. Something we watch every week, and still, just hovering above 200,000. But most importantly, we'll get PCE index, personal income, and this is the key measure of inflation for the Fed. We can see the expectations for core are 0.4% month-over-month increase and 2.4% year-over-year. I'm sorry, that's 2.4. That's the PCE year-over-year, and then core is 2.8. So core would be accelerating, and so would regular PCE. Last month it was 0.2, and this month's 0.3. So, we as the Fed members shared, there's this fear in the back of our heads, like, okay, wow, well, inflation maybe not done, So, the economy is so strong, it wouldn't be absurd to think it could. But we'll see. I'm not really speculating on where inflation is going to go. Then we have more speakers, Fed speakers, Atlanta, Chicago, Cleveland, Kansas City Fed presidents all speak. Then Friday, we wrap it up with manufacturing PMI and ISM and some more Fed speakers. Just a quick look at next week. We get non-farm payrolls, unemployment rate. So we're setting up that for next week. On the earnings front, earnings are winding down. This week we're getting started with Workday. Then on Tuesday, you got Lowe's and American Tower, AutoZone, Constellation Energy. Wednesday, Salesforce, TJX companies. I'm going to do a write-up on this one if you're interested in it. Snowflake, Monster Beverage, Bush, Eddie's, Dell, Autodesk, and some international ones to wrap up the week, excuse me. So yeah, that's, earnings are finally slowing down. It's our busy week, busy earnings season. So yeah, let's take a quick look at these interest rates expectations. So, we got the March meeting here. We got 97% chance, 98% chance of them keeping rates as are. And we can see now now we're at 525 to 550 basis points. So we got March and May. The expectations are that they stay the same. So that's changed, right? A few weeks ago, we were expecting the first cut in March and the second cut in May. But, these expectations have reversed pretty significantly. Now it's just a 53% chance that we even get a cut in June. So, we could even see that shift. But But now, for now, markets are pricing in 1, 2, 3 rate cuts by the end of the year, which is interesting because when Fed Chair Powell first spoke of rate cuts in December, he said the expectations were for 3 cuts. And so now the markets are finally aligning with what Powell was projecting to the market, which is interesting. It actually noted that it really seemed like people were getting ahead of themselves with 6 cuts. So, these things are sort of falling back in place. So let's get into the charts of the broad market. This market is really strong. I mean, this is a bull market. Do not fight it. And, don't look for reasons for doom and gloom. It just keeps pressing higher. Something I will note, I noted this, I missed you last week in Momentum Monday because we had Monday off, but I wrote an article highlighting this channel here in the NASDAQ. It's the same setup in the SPX. And we saw a breakdown, and I thought, wow, maybe we're going to get a little pullback here. Maybe we'll pull back, a few percent, 5-6%. But so we broke down, and then following that, we had NVIDIA earnings, which were pretty incredible, and it just blasted to new highs again. You can see the S&P, we have the same setup, right? We broke down, and now we're just building out another channel. Okay, so one thing I will note is that I'm going to get into this indicator in a minute as well. We have broadening channels. Okay, they're expanding, getting a little bit wider. Okay, what you want to see if the market's going to continue to blast higher is tightened ranges and breakouts and lower volatility. So this indicator right here is the ATR. It's the average true range. It measures the daily average range with a 3-week look back. So you can see during this whole rally, it's a measure of volatility, right? How many points does the market move in a day? So we can see during this whole big rally, vol was pretty low, right? NASDAQ was moving less than 200 points a day. And that's what you want to see in an uptrend. You want to see a low volatility uptrend. That's how you know it's just a steady grind higher. That's exactly what we saw. And so we've started to see volatility pick up. All right. So now we're at 240 points a day. You can see during this sell-off, we got up around the same areas, 240 points, and we saw a sell-off, and then, right, and then this was the peak, the maximum point of selling at the end of last year, and it just steadily as volatility fell. You can see these broadening in some of the leading names. It's Amazon, it's just the channels are getting wider, and I don't think that's imminently bearish. I think it could mean, maybe we get more sideways action, or maybe it just continues higher. A bull market just continues to be a bull market. And this one too in meta, this is kind of like a bearish kind of look. It's more like a bull flag. Usually you want this is a bear flag. Usually you want to see a bull flag sort of descending, right? This is ascending. So, again, we see this huge increase in the daily ranges, but again, strong market is a strong market. So I'm certainly not bearish. I think we could see maybe some tightening of the market, some tightening of the price. Maybe we trade reading the range, or we just break out and continue to move higher. So, the ATR is something I like to look at regularly. Just looking at my notes. Okay, let's take a quick look at Bitcoin, which looks very conducive to higher prices. I'm going to share 2 Bitcoin-related trading setups in the charts as well. But yeah, this is just another really tight range, and it looks primed for another breakout, honestly. And don't let the bears get to you. I mean, eventually we're going to get a pullback, and no one knows when it's going to happen, and it might be nasty, but you didn't get paid for being cautious at all yet this year. I mean, when we take a look at the individual names, you'll see there are so many. When I do the Momentum Monday, I go through the Zacks rank and I go stock to stock to stock, and I look at the charts, and there are so many productive bullish trading setups in the market right now. And clearly, I mean, indexes made all-time highs at the end of last week. So, That's bullish, and don't let anyone convince you otherwise. So let's take a look at oil. Quick look at oil. We're trading this ascending channel. You got a nested range right in here. We'll see. You can see in the HER volatility has fallen. Oil's been trading sideways for the last few months. And, we'll see. Maybe we break down and test this level in reverse, or break down and then break through. Or, we break out, test the upper bound, and then break out. So, oil, it's sort of in a mixed area. There's a couple of oil stocks look pretty good, but this is sort of a mixed picture. It would be interesting if we got a strong breakout and we made, a move to the mid upper 80s. That would certainly be interesting for the inflation narrative as well. And there's one I wanted to look at. I mean, Tesla does not look good. I mean, it's funny that they include this one in the Magnificent Seven, because they all look fairly good. I'm doing extended report on the Magnificent Seven that will be shared on Zacks. Some of them look okay. Some of them look great, but Tesla just looks terrible. I mean, this looks like it's going to break down again. And you got falling sales expectations, lowering the prices of the car. So I don't know. If you're in Tesla, maybe be wary. I could be wrong. Maybe this is the bottom of a breakout, but it doesn't look conducive. And then there was one fun chart I want to show you guys. This is the chart of cocoa beans, chocolate. And it's just been on an unrelenting rally higher. It's gone from 2,500 to 6,500 in the last year. And year to date, it's gone up 50%. Looking at the volatility, means it's peaking. Maybe it's close to high, but it is a crazy move. Just auto market, many people are watching. A niche market, but a crazy move nonetheless. So I'm going to share. I'm going to do it a little bit different today. Just want to show you guys Zacks rank really quick. I usually look at the top stocks. I decided to avoid these top three guys today. But I mean, look, NVIDIA, Amazon, and Meta are the three. This is measured, organized by market cap. And these three stocks have been sitting on the Zacks rank for months. I mean, Meta and NVIDIA were on the Zacks rank all year last year. And they still are. Netflix, too. Look, this one's on the top, too. Don't sleep on the Zacks rank. I mean, it really does a good job of sharing good stocks. And I do share trading setups, but you don't have to trade it that way. I mean, you just measure the position size properly and add some of these to your portfolio. Having a trading setup helps. You can measure the risk a little bit better, but you don't even need to. I went through all of these stocks, and so many of them have really, really bullish, momentum, strong looking charts. ARM, I'm going to look at this one. This is a really good market for if you're a bull trader. I mean, there's lots of stocks going up. So, let's take a look at some of the charts. I have more than 3 today. I just couldn't help myself because there were so many good ones. But let's get into it. I have a few more aggressive and a couple more defensive though. So I mixed it up. I didn't just do, semiconductor stocks like this one. So ARM, recent IPO, up and coming semiconductor name. It's a beast. This thing had good earnings. It's got 45% earnings growth. Estimates over the next 3 to 5 years. Uber premium valuation, 112 times. And of course, that's a Zacks rank one. All the stocks except one, which I'll show you, has a Zacks ranks too. But all of them have Zacks rank ones. And ARM is just caught up in this very strong AI trend. If you're supplying, oh wow, look at this. Okay, the market opened and we broke out. So this is the consolidation I was watching. And look at this, ARM gapped up 10% this morning. All right, I mean, if you're brave, maybe take a small position in this one, but it just broke out. So If it closes above 134, this one's good to go. I mean, you never know with these crazy hype stocks that have been going on. This is a bit of hype for sure. You could blast lower too. I mean, you have to size the positions according to the volatility. But yeah, when they go, they just keep going sometimes, and this one is one of those stocks. This is a really nice consolidation. And ARM, okay, maybe we catch it on a pullback. Maybe it gets to the lower part of this daily range. Maybe 140, but this one looks ready. I mean, this AI thing isn't going to stop. So ARM is a good one. If NVIDIA is too high for you, or SMCI. So, keep an eye on ARM. Okay, the second one, we have KKR. This is a private equity company. It's a cool way for investors to get exposure to alternative assets. You can see it's in the top of the industry rank, top 6%. I know one of their business segments, private credit, has really been booming over the last year. Banks have struggled to loan out a lot of money to slightly higher risk situations to businesses. And these private equity guys have stepped in and really filled that gap. And I know they're really printing money doing it. Huge earnings per share growth expectations, 25% over the next 3 to 5 years, which is above 25 is more than its forward earnings multiple of 19.5. It has a PEG ratio below 1. I mean, that's compelling from a valuation perspective. And of course, Zacks rank 1. Okay. And it's got a nice bull flag consolidation. And, you can see this private credit thing has been very positive for it. Look, if since November, it's almost doubled, 80% it's up. So, yep, KKR. I mean, and investors are really excited about it. People are buying into the hype. And these PE guys are killing it. I mean, they just keep raising money, keep producing good returns. So, yeah, watch this one, KKR. Good stock, strong company, good history. And, so if it breaks out above, let's call it 97 even. So KKR gets above 97 today or tomorrow, sometime this week. Maybe it still rests and trades sideways, but you watch this consolidation. This is a good one. Okay, so we're moving on to the Bitcoin setups. I got 2 here for you. Coinbase, everyone knows this one, and I have an even more high-risk one. So Coinbase, we know, is the last standing cryptocurrency exchange in the States, or one of the, I don't know. There's lots of trouble in these exchanges, but they're staying legit for now. Top 7% of the industry rank. Uber premium valuation. No earnings estimates, but they're probably pretty good. I know the sales have fallen actually year over year, but this is really just Bitcoin beta. So Bitcoin and the broader market is strong. Coinbase is gonna, but it has earnings estimates rising, so have that tailwind. It's got Zacks rank 1. Actually, let's just take a look at the other one too. This is CleanSpark. This is a Bitcoin mining company. It has Zacks rank 2, so it does have upward trending earnings revisions. It's a small company. I mean, we're at 3 billion now, but it's a newer issuance, and but this stock really moves. So let's take a look at them both. All right. Oh, Coinbase breakout. Boom. Man, market is strong this morning. So yeah, right. I noted this wedge here. It took a little time to work, but then it got going. And we got another kind of funky looking flag, but that's definitely a setup here. And we got the breakout. So watch this one. Stays above 170 today. This and Bitcoin and the rest of this high tech market is just going to probably continue higher. And this is a good setup. So keep your eye on Coinbase. Maybe worth that if you like Bitcoin. And CleanSpark. Let's see this guy. And boom, breakout. Yep, market strong. Up a cool 12% today. I mean, that's what you see in a bull market. This is a really good one. Really, really clean setup. This thing is just going to blast higher. So long as you get the close above 18 today. So if you're watching CleanSpark, You want to see the close above 18. This one's kind of a cooler setup because it needed a little bit more oomph to get through that breakout. Clearly it has. And you just want to see it close above here. Okay, now we have a little bit more of a defensive name. We got Cardinal Health. This is a distributor of pharmaceuticals and other medical supplies. I think it also has a pharma arm. It is a critical piece of healthcare infrastructure in the United States. Does some of the most sales of any company in the world, hundreds of billions quarterly, but has very tight margins. It's just a distribution company. It's still a $26 billion company, but it's interesting because they do literally hundreds of billions quarterly. But yes, they have this really tight margins. It's like Amazon's e-commerce business. We can see it's got good earnings growth projection. That's really nice. Almost 16%. And you can see it's above the forward earnings estimates. Forward earnings multiple. PEG ratio in year one is fair to below fair value, according to the metric. Of course, top Zacks rank. And chart. And we got a breakout. Everything's breaking out today. Yeah, we're a little late to film today. It's 9:45 now, so the markets are open. Yep, that is a clean breakout. All right. We want to make sure we don't do this. Although this was following earnings, so it's unlikely you get this kind of big reversal like this. This is a clean breakout. Cardinal Health. This thing is just going to continue going higher. This is a good setup, especially if you're kind of scared of this market. It's getting away from you. This is a defensive name, Cardinal Health. So if the broader markets do take some heat, Cardinal Health will probably outperform. Because healthcare stocks just do that. They're non-cyclical and they're, it's got a very fair valuation. It's not very expensive. So Cardinal Health, CAH, keep an eye on it. Okay, and lastly, I know we had a lot of stocks to look at today, but there's just a lot of good stuff in the market right now. I want to reiterate, strong market, good setups. Correction could come any day. So you want to be wary, but don't be scared either. Know your risk limits, know where your stops are, know where you're going to get out, but, don't use leverage. Just ride this bull market as best as you can because you don't get opportunities quite like this one. We're almost 2 months in, right? It's almost end of February. We're almost 2 months in. So although I'm sure we'll get a rally through the end of the year, this, cycle, sort of up cycle, it's definitely getting a little bit long in the tooth. So don't want to overextend yourself here, but don't be afraid to trade some of these strong stocks. All right, so last one, Manhattan Associates. It's a software company, supply chain. This is a really good stock. This thing has just been going straight up, like ever since I didn't know much about it. But it's been going straight up ever since I started watching. It sat on the Zacks rank for a long time. It was one of those stocks that I was always like, oh, it's getting away. You got to wait for the pullback, and it just never comes. Pullback never comes. So, yeah, it's got a high earnings multiple. It's got, let's see what the growth is, sales growth. 12% sales growth, 15% earnings next year growth. Not too high, but it's a beast of a stock. And it almost never sets up like this. It's gone much higher, but since 2023, more than doubled. But you haven't gotten any really nice bull flags like this. I guess this one was okay, this longer one, but it wasn't clean. This one is clean. This is a earnings gap, good setup. And Associates is a good one. Pricey, but it's a good one for trading. And it's close to breaking out. Not quite there yet today. But if it gets above, let's say, 251.40, we'll call that a breakout. And it'll be worth trading. And, always watch the breakouts. A reversal back, not a great sign. It's okay if it goes back into the range and trades and then breaks out. Sometimes it does that. It makes it tricky. But you want to measure your risk to down here, to the lower bounds of these ranges. Because that's when you definitely know you're wrong, right? It could break out, reverse, trade sideways, then continue. You see that. But usually, if it's below here, you got to wait for another setup, for the setup to reset. But that's it for the trading setups for today. All right, everybody. Thanks for tuning in. I hope you found this valuable. If you do like this content, definitely subscribe to the Zacks YouTube channel. And if you want even more from Zacks, you can go to the promo link in the description or just go zacks.com/promo and sign right up. Thanks. Have a good day.